We're here at SECA in Scottsdale, Arizona, 2012. I'm with Mr. Ross Elliot. He's the Director of Captive Insurance for the state of Utah. Thank you for being with us, Ross.
Thank you, Tom. It's a pleasure to be with you.
Okay, Ross, I understand you just shared with me that Utah has only had a captive statute for less than 10 years, yet you have almost 300 captives that you've licensed. Can you share with me how you've been so successful as a relatively new domicile in the captive industry?
I think it's for a variety of reasons. One of which is that Utah is a great tourism domicile. Second is that it's easy to get into and out of. It's a Delta hub. Third is that there's a favorable tax base there with no premium tax, just a simple annual renewal fee. And fourth is that we're just great guys, I suppose, Tom.
Okay. That's absolutely true, because people like doing business with you. I hear a lot of positive feedback and no negative feedback. So with respect to the sophistication of your staff, do you have part-time staff from the Department of Insurance, or do you have dedicated captive insurance staff?
We have a dedicated fund that supports our captive division. It is dedicated to that captive. Our people who are there are captive insurance only. We've hired people with advanced degrees who are actively seeking further credentialing and have been very successful in that.
Have they been able to keep up with the application demand in terms of relatively efficient and short processing times?
We have an average application will take us under 2 weeks to process.
Okay.
We've been known to do it as fast as a couple of days, depending on the sophistication and the complexity of the application.
Okay. Where do you see your growth drivers right now in terms of types of captives? Is it the segregated and sponsored cell structure, or is it employee benefit driven? Where do you see the growth coming from this year?
We've seen a lot of growth from the healthcare and the manufacturing sectors this past year. Those are primarily in pure single-parent captives, but we've also licensed our first sponsored cell captive. We've been actively developing our staff so that we'd be able to provide those resources as more business comes.
As you add cells to your cell structure, does the minimum premium tax kick back in, or additional capital, or is that already built into the original cell formation?
It's built in the core. The sponsor core is the only one that is qualified as an insurance company, and so it's the one that the $5,000 renewal fee applies to. The additional cells do not, at this point, have an additional cost associated with it.
So it's very cost effective to add cells to a sponsored core. And the premium tax doesn't kick in. Are there application fees when you submit to add a new cell to a sponsored core?
There are no application fees
at this time,
point for additional cells.
Okay. And then the amount of additional capital is up to the sponsoring entity of what they're going to require?
Absolutely.
Mm-hmm. All right. Do you see any kind of formulas being established for that?
We've talked about setting up a separate fee, a small fee for each additional cell, but we have not moved there yet. We haven't had the demand yet. We're looking forward to that. At some point, we'll need to in order to fund the regulation.
Yeah, there's a lot of work involved. It's almost like a new application. If not, it is a new application.
That's correct.
So how about with respect to capital? Do you think you might require some minimal additional capital or some ratio to premium that cell's expecting to write?
We haven't addressed that formally yet. I suspect we'll need to and look at that very carefully, because obviously it's important.
Yeah, okay. Well, thank you. We're cognizant of not having the video segment be too long, but I appreciate you sharing your time and expertise with Ross, and congratulations on the success Utah's having in the captive insurance industry.
Good luck to you.
You too. Thank you.
Thanks.